Well, joining us now from TCS, Rajesh Gopinathan. Rajesh, thanks very much for joining us here. The Prime Minister in his speech talked about the threat of protectionism and that impacts, for instance, the IT sector. While the US doesn't see the visa issue as a trade issue and more as an immigration issue, India sees it as a trade issue. In the world that we live in today, has the threat now receded, diminished even a little bit? Have you adjusted to this new normal, so to speak?
I think my big takeaway from the Prime Minister's speech was what he said at the beginning about how the whole World Economic Forum has been built by keeping in mind both the forces of Rajniti and Arthik progress, right? The economy and politics. So we got to be cognizant of these realities and find solutions in between. I think as companies, we are all operating across multiple boundaries, and our customers are also in a similar kind of a situation. We are overall quite positive. There are obviously specifics to be dealt with, but the overall environment is still quite positive. And I think that's the spirit that the Prime Minister spoke about.
Well, since we're talking about the environment, let me ask you about the IT environment. And the market certainly seems to be betting on the fact that the environment is changing for the better. What's your own sense? And I remember your commentary on the day that you put out your numbers. You seem to suggest that we need to start looking at spending from a different lens, not from the traditional lens that we've gotten used to looking at these things from. What do you mean? And give me a sense of what you're seeing change in the environment.
I think the world is going from a more, if I would say, a batch processing kind of an environment where there's an annual cycle and then there is budgetary cycles which are very tightly linked to that. We are going into a much more agile world, and with projects which are much shorter duration but on a constant basis, with ebbs and flows of funding based on where the business priorities go. And IT is becoming more and more linked to business. So the kind of spending that you see is a lot more dynamic compared to more static kind of annual budgeting based funds. So that was what I was alluding to. And this whole shift to agile is something that we are very significantly embracing. And we think that we are leading the way in terms of going to what we call a 100% agile world.
Okay.
And I think that's the new frontier for technology. And in that scenario, many things will change. Budgeting will change, performance management will change, contracting will change. And that's what I was talking about when we said that this concept of, in November, December, you will get visibility on budgets, and by Jan, February, starting spending. I think that world is behind us.
Okay.
And we'll have to wait and see how it exactly kind of comes together. But it's going to be a lot more dynamic, lot more real time, and lot more agile is the word.
But a lot more challenging as well then?
Different kinds of ways. Agile programs, once you are deeply embedded, think about it this way, that your best bet is to be very close to business. And agile is a methodology that allows you to get very close to business and to know what's going on in business. I would anyway trade that off against stability in budgets. Because if you're close to business, you're constantly realigning yourself and your resilience is a lot longer. So I would bet on it any day compared to being a bit distant, but getting an artificial sense of security by saying, okay, this is the budget.
Well, speaking of security, let me ask you about the deal pipeline. You've just done, 4 big 500 million plus deals. Is that an indicator that large deals are back on the table?
I think what's important about these deals is they're quite unique. So they are not like old, maintenance deal being clubbed together into large ones. There are still some of that going along. But this is a totally different kind of a construct. It's combination of front-end digital and back-end technology transformation and then ops to build together. So it takes a unique blend to be able to stitch this together. And we are seeing increasing traction in our customer base where there's a lot of interest in looking at these truly transformative deals. But I wouldn't know whether to characterize that as an industry-wide phenomenon, but we definitely are seeing traction in our pipeline.
Is this pipeline looking strong? Do you believe that you will be able to continue to, at least in the foreseeable future, clock up some of these kinds of deals?
I know we have set ourselves a very high threshold, so I don't want to comment against that. But let me put it this way, that the interest levels are quite high, right? And these are pipelines that are very difficult to predict. So there is traction. there is interest. But how the closure rate comes through, that only time will tell.
There's been a lot of talk, and I asked Chandra this, and he said, well, that's something that TCS is going to have to look at. And this is the possible consolidation within the group of the IT companies. What's your own take on that?
It's not a segment per se that we look at. We are always constantly on the lookout for the appropriate opportunities. But per se, we are not looking at the group as a segment. And therefore, I don't have a particular point of view on any of that. We are looking we don't look for acquisition as a means of growth. We look for acquisitions as a means of market entry into a new service line or into a new geography. We've done a lot on the geography side. But it's
is
something
2018 going to be an acquisitive year?
I don't know. If the right opportunities at the right price point comes around, we are always game.
Is it going to look like a better year in comparison to the previous one?
That I don't want to comment upon. You guys have put that in our mouth and gotten us into trouble. But we are positive. We are coming, especially right now. We are riding high. We are looking good. So as I said, the pipeline is strong. There is a traction. Closure will depend. Unfortunately, in the new scheme of things, long-term visibility is limited. So we'll roll with it as it comes.
Well, Rajesh, always a pleasure. Thanks very much for joining us, and we wish you the very best
Thanks,
of luck. Well, we're continuing our coverage here from the World Economic Forum at Davos. Joining us now is Neeraj from Apollo Tyres. Neeraj, appreciate you joining us on CNBC TV 18. Let me first ask you about what you made of the Prime Minister's speech and his message to investors here in Davos. What, to your mind, was this most significant takeaway?
Well, I thought it was a very, very positive speech, very holistic speech. Spoke well about India, has given very clear signals for the industry to come and invest in India. Has also said that the ease of doing business, he will lay the carpet for FDIs to come into India. So all in all, I think it's been very, very positive. The mood here is very positive for India, and people are really hoping to see that he actually implements what he's saying. And I think from my perspective, we've seen in India that there are positive signs. We ourselves are now just setting up a new greenfield in Andhra.
That's what, about 1,800 crores?
1,800 crores we're going to be spending in Andhra. So CapEx is going into India. We're spending in Chennai. So all in all, I think it was very, very positive.
So altogether, in this financial year, what is the investment plan?
Well, as you know, Chennai is going through a expansion program. Andhra will start this year, so less of investments in Andhra. It's a greenfield, will happen more towards the end of next year. We'll be looking at around 1,000 to 1,500 crores in this fiscal year.
Okay.
But I'm happy to say our Q3 results have been very positive, and that's really the signs of the reforms that have come in. GST, we've been least hurt. We're seeing supply chain increasing. Ease of doing business in India has also relatively become easier. Q3, like I was mentioning, we've seen double-digit growths in India. Europe, on the other hand, has also been very good for Apollo. So all in all, I think it's a good sign going forward. So the journey has begun. Next year is really going to be consolidation, getting Hungary up to scale, getting Hungary production out, and really getting profits out as much as we can.
You spoke about the Hungarian consolidation, but what about M&A? Is that likely for FY18 on the calendar? Because there was a lot of rumors once again around a South Korean company and so on and so forth. What's the thinking on that front?
No, I don't think, Shereen. Currently, our hands are full. We have to see how we can consolidate Hungary. We have to see how we can take up the expansion coming out of Chennai. So right now, both human resources and capital resources are totally booked up. And we're just trying to see how we can get the benefit of all these products coming out, selling them in the market. Profitable growth is what we are looking at in the new FY19.
So since you were talking about demand picking up, and I was just taking a look at the numbers, the past 3 years it's been about a 1% CAGR between FY14 and FY17. So do you see that changing? And where is the demand really kicking in from? Largely replacement or?
I think both. You will see Q3 volumes at a high, both in OEMs in India and in replacement. we're seeing double-digit growth. And Apollo has really launched a lot of marketing activities, a lot of new products into the market. The Chinese anti-dumping, which the government finally came with, has also helped the industry.
So how much is that down by? About 40%?
Imports had reached 30% of the market, now are down to 15%.
Okay.
So, and demonetization also helped Chinese walk away. So I think with Apollo's new product strategy, new R&D products that are coming out, I think we are in a state where we will see healthy growths coming on the top line. But I just want to warn that raw materials still remains a challenge.
Is that going to have an impact on margins?
Yes, right. Margins are under pressure. They'll continue to be under pressure. That's where we want to see some reforms coming in, custom duties coming into for our raw materials that are being imported into India. And that's what we are taking up with the government to see if we can do some reforms over there so that we become competitive enough to fight with the MNCs in our turf.
So, I mean, if that were not to happen, what is the kind of margin picture, margin trajectory that we should expect?
Well, like I said, margins are under pressure. As you know, oil has gone up. It has touched $70 a barrel. So margins will remain under pressure. I can't give you any forward-looking numbers, but yeah, they do remain under pressure. But at the same time, volume increase, market share increase should release some margins also into the system.
You know, the global story at this point in time, we're seeing a pretty broad-based global recovery. So what's your own take on that and the benefits that it is likely to accrue to you?
Well, I think, we've seen this earlier in the stage, and that's why we put capex into Hungary. We put over 500 million euros into Hungary. We are seeing a good demand for Apollo and Vredestein brands in Europe. We've put seeds into Thailand, into Dubai to look at the Southeast Asia, Middle East markets. We're currently touching close to $80–85 million of revenue there. So yes, global markets are recovering. It's good for us because already the hard work has been done, the foundation has been laid, brand pull is happening, and we just have to sit back and try and see that we can really push our products into the system.
So what's the one thing that you're hoping will be realized for you in 2018 from a business strategy perspective?
I think the main challenge remains Hungary because it's a new land, new culture, new geography. We need to see how quickly we can ramp up the production there and sell that. And that's my main target for FY19.
So are you looking at India as a foreign investor or as a domestic investor now that you've moved out of India and you're actually based in London?
I'm very much Indian and I keep going back once a month. And in fact, we have 50 expats in Hungary from India. And we are very proud to put our India flag in Hungary and in Netherlands. And it gives us great satisfaction.
Well, Neeraj, it's always a pleasure. We wish you the very best of luck. Thanks for joining us here on CNBC TV 18. Neeraj covered there of Apollo Tyres, taking us through the outlook for 2018 here from Davos. For now, it's back to you.